Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin and interest rates. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. We are going to have a sale here again. We normally have one in November, so if you do want to sign up for Into the Cryptoverse Premium, make sure you do so now while the sale is going on, and we'll probably run that through the end of the month. So, links in the description below. Let's go ahead and jump in. So Bitcoin has, seen a pretty nice move here up to around 35K. And, 35K is a level sort of coming into the year we said would be, could be an upside target for Bitcoin in 2023. Now that we're at that level, of course, it's not like it's impossible for it to go higher. But what I do want to do is I just want to spend some time talking about Bitcoin and monetary policy and what influences that monetary policy, and then how it could theoretically affect Bitcoin. Unfortunately, we don't really have a ton of data, right, for Bitcoin, and changes in monetary policy, but we do have some. And in order to fill in the gaps, we'll take a look at perhaps the S&P 500 to see how it performs during various phases of the business cycle. Okay, so the first thing I want to do is I want to overlay interest rates to this chart. Now, you're probably thinking, you probably already know what I'm going to say. You think you know what I'm going to say, but I will say, like, there are examples of Bitcoin rallying as rates go up, right? We've seen it multiple times, or when the Fed pauses. Okay, so in 2016, 2017, you can see that the market was rallying and the Fed was raising rates. Now, this is what normally happens, okay? Normally, if you think about it, bull markets are the market adjusting to higher and higher interest rates, right? Now, that might seem somewhat counterintuitive, but let's look at the S&P, right? Let's look at the S&P. You can see that when rates are going up, the market also tends to be going up. And why is that? It's because normally the Fed is they're making monetary policy tighter as the market continues to go higher, just so we don't run out of control and inflation comes in, right? You want to keep a good balance between an expanding economy but not wanting to make the market too loose, right? Not wanting to make conditions too loose so that you basically just have a runaway market. So with Bitcoin, I mean, you can clearly see that, I mean, it sort of looks like that over here, right? With the S&P going higher, as rates were going higher, so too Bitcoin is going higher over here as rates were going higher. Now, what you'll notice last cycle is that at this bottom here, it actually corresponded to the Fed pausing rates, right? It corresponded to a pause. And the top that came in 2019 occurred before the first rate cut, right? So the first rate cut was in July. You can see it right here. So this cut, you can see that Bitcoin topped out before the first rate cut. Now, this is something that might not be intuitive, when you first sort of hear about it, right? Because normally we would think like, okay, well, if you get a rate cut, that means you're going back to looser monetary policy, and therefore risk assets should start to do well. But again, if you go look at the S&P 500, where we have a lot more data for, right? Once you start to get rate cuts, that's usually, right? I mean, usually that's where the market tends to start behaving pretty poorly, okay? You can see rate cuts here started basically when the market topped. Over here in 2000, the market had already topped before rate cuts began. So when rate cuts start, it doesn't tend to translate to an immediately bullish market, because oftentimes the reason the Fed is cutting rates is because they're trying to compensate for perhaps keeping rates tight for too long, and now the market is screaming for help. Normally, the first few rate cuts that the Fed does is not enough to turn the economy around. And again, the market will tend to bottom out close to the last rate cut once the Fed figures out just how much they need to cut rates in order to get the economy back on track. But a lot of times the market will just continue to fall until you get close to whatever that last rate cut's going to be. So you can clearly see it how it has played out in the past for the S&P 500. So what you'll see again is that the S&P in the financial crisis, right, it topped out right around the first rate cut, and in the dot-com crash, it topped out before the first rate cut. Now, with Bitcoin, we unfortunately don't have a ton of history. It'd be nice to have more history, but we just simply do not have it. Throughout this entire bull market, these bull markets and bear markets over here, interest rates were essentially at zero, right? I mean, there wasn't all these rate hiking cycles that Bitcoin really had to contend with. But we can look at least one cutting cycle, right? One cutting cycle. And remember, with the S&P, when the Fed starts cutting, the market tends to not do that well. Now, there are some exceptions. If you look at 2019, you can see the Fed started to cut in June of 2019, and the market still did okay for a little while, but we still ended up getting a hard landing, right? We still ended up getting the drop into the pandemic. So whether you want to include that one or not is up to you. But generally speaking, once the Fed starts to cut rates, the market tends to see some sort of a sell-off, okay? And we've seen that many times. And I mean, you could go back and look at the 70s, right, and see here that when the Fed started to cut, the S&P still continued to drop for a while. Now over here, it was a little bit different than recent business cycles, because that was also a period of high inflation. Okay, so going back to Bitcoin, we've previously talked about how last cycle Bitcoin bottomed out once the terminal rate was reached. It then topped out before the first rate cut, right? So the first rate cut was here in July, right? So let's just draw that line across. Sorry, the first rate cut was right here in July. Bitcoin topped out just before the first rate cut. And where did Bitcoin bottom? On the last rate cut, right? So kind of similar to what the S&P does. It bottomed out on the last rate cut. Now, why does the Fed cut rates, right? Why would they cut rates? Again, it's because they've done too much damage to the economy, and the market can just simply no longer bear it. If you go back and look at the financial crisis, I mean, it's not like the market was screaming for help when they started cutting rates. I mean, the Fed started to cut, the market was essentially at all-time highs. But if you overlay the unemployment rate, you'll start to see why. You can see that the unemployment rate had bottomed, around May at around 4.3% or so, 4.3, 4.4%, something like that, 4.4%. And it was starting to move up. So by the time the Fed started to cut, it had moved up to 4.7%. So it's not like the Fed was looking at the market and said, oh crap, the market, it's at an all-time high, let's cut. No, it was the economy, right? Maximum employment that they were worried about, because it's a dual mandate, right? You need price stability, but you also want to see maximum employment. And here, clearly they had raised rates too high for too long, and the unemployment rate started to go up. And therefore, to compensate for the unemployment rate starting to go higher, the Fed had to start cutting rates. But once the Fed started cutting, the market dropped. The market dropped because the unemployment rate was going higher. If people are getting laid off, I mean, the last thing they're probably thinking about is what stock are they going to go buy, right? That's not going to necessarily be on the forefront of their mind if they're worried about getting laid off, okay? So that's why we track the labor market. Over here, right, in the dot-com crash, why did the Fed start to cut? Was it because the market had come down a little bit? No, I mean, the market had risen a ton over the last several years. It was because the unemployment rate was starting to trend higher. So the Fed started to cut. And that was where a large portion of the selling eventually happened. So then, you can look at Bitcoin today and try to make sense of what's going on. We've put out various thoughts about sort of what's going on, but you'll see that once we hit the terminal rate, Bitcoin was already well off this low over here. So when the terminal rate was reached over here in 2018, again, that was where Bitcoin bottomed. And then Bitcoin topped before the first rate cut. But the reason why this cycle looks so much different from this one is because normally the Fed raises rates in a bull market, right? When the market is trending higher. But in this case, they did not do that, right? They should have raised rates. I mean, hindsight's easy to say, right? But they should have raised rates in 2021, but they didn't. And so rather than raising through this entire bull market over here, they only started to raise in early 2022. In March in March of 2022, that's when the first rate hike occurred. But that was already once the bear market had started, and the S&P then dropped basically off and on for the next 9 months. Bitcoin dropped until November of 2022. And so this entire rate hiking cycle started after the bull market from 2020 and 2021 was over. So in this case, we sort of talked about this idea that Bitcoin bottomed out not at the terminal rate, but at around the point where the Fed shifted from 75 basis point rate hikes to 50 basis point rate hikes and then 25, right? So I've previously argued that is what could have theoretically marked the bottom for Bitcoin back in November. That low that we had is that shift from 75 basis points to 50 basis points. And then ever since then, I mean, Bitcoin has slowly trended higher in the face of raising rates, of higher and higher rates, right? So I mean, at that point, rates were at around 4%. Now they're at 5.5%, and of course, Bitcoin, as we know, has trended higher. Where it becomes difficult to navigate, really difficult, is last cycle. We know that Bitcoin stalled out before rate cuts began. Now, this cycle is unlike the last one in the sense that, again, this low here did not occur at the terminal rate. The terminal rate occurred, way over here back in July, and Bitcoin was, of course, well off of this low. And again, a large part of that, I think, is just due to how late the Fed has been in this hiking cycle. So then will it play out in a similar manner for rate cuts as it did last time? I don't know, but what I do know is when you look at the S&P 500, there's all sorts of ways that it has played out in the past, but the most common way is that there's a sell-off sometime during rate cuts, assuming the unemployment rate is starting to go higher. You might wonder, well, why in 2019? Why in 2019? What did the market continue to go higher, even though we got rate cuts? Because the unemployment rate wasn't going higher, right? The unemployment rate was still trending down. So we got these rate cuts, but the unemployment rate wasn't really showing any weakness at the time. So the market trended higher. These other two business cycles, the market sold off, but it was because, again, the unemployment rate was going higher. So then that brings you to today, right? What's going on? Is the unemployment rate trending down? No, right? I mean, it's potentially formed a base down here, and it looks like it's starting to potentially trend higher here. Now, again, the unemployment rate moves very slowly. I mean, there's a chance that it could just slowly go up, right? I mean, maybe in December it prints around the same level that it printed, this month, and then sometime in 2024 it starts to pick up the pace. But it moves very slowly, and we have to remember that, right? I mean, we only get one data point each month, and if it comes in at 3.9% again, that's not going to necessarily be a huge move in the labor market over that month, but it doesn't mean that it's not going to go 4% or even 5% sometime in 2024. So my sort of baseline assumption is that Bitcoin will likely do what the S&P normally does under rate cuts, assuming that the unemployment rate is going higher, which is what it's starting to do. Right? That's exactly what it's starting to do. So, looking at it over here, I said over a year ago that the terminal rate was likely going to be 5.5%. And I mean, it seems like that's where the terminal rate is. So then how do we know where, when the Fed's going to start cutting? Well, you can go look at the bond market. The bond market changes their mind fairly frequently as to what's going to happen in the outlook on the economy. So I would not encourage you to take this to the bank. The bond market thinks the first rate cut comes in May. Okay? It could actually come before that if the unemployment rate continues to go higher. In the last meeting at the FOMC, Powell said that they're not even talking about rate cuts right now. They're not even talking about them. But when asked if they're going to stick with their forecasts in the prior summer of economic projections, the SEP, Powell kind of made it seem like that. I mean, he basically did not seem that confident that they were going to hike again. And I think the market thinks that they're done. And I think the Fed's done. I don't think they need to raise again. Now, it's possible I could be wrong about that. I could be wrong about, 5.5% as the terminal rate. It's possible that they would have to go higher. The way that it could happen is if 5.5% is not sufficiently restrictive, right? So like if 5.5% ends up being a level that the economy can handle, and if the economy starts to expand even at 5.5%, then it's possible that sometime in 2024 the Fed will have to start raising rates again to actually get it to a sufficiently restricted territory. But right now the bond market thinks that the Fed's done. I think that the Fed's likely done. And when you look at this chart, the unemployment rate, I mean, it certainly seems like it's starting to go higher. So if the Fed has a dual mandate, which they do, of price stability and maximum employment, how can they be justified in continuing to raise rates, especially going into an election year where there's going to be political pressure, right? How can they be justified in raising rates further when they have a dual mandate, price stability and maximum employment? And you can see that the unemployment rate is starting to go up, right? It is starting to go up. It was at 3.4% earlier this year, and now it's at 3.9%. That is a fairly substantial move in the unemployment rate. So if this continues this move, right, if it continues this move, then that's where it could become a problem. Now remember, look at this cycle over here. You can see that a base was formed, right? A base was formed, kind of like a base was formed over here, and then it started to move up, but the market did not immediately react, right? It wasn't until it was clear, right, that the unemployment rate was going to continue trending higher, right? It's not just because it finds a low doesn't mean the market has to immediately drop, right? It can take a while. From this level here, April 2000 until the market really started to drop, you're talking about half a year, right? Again, when you look at it like this, it seems like, oh, well, that has to happen tomorrow or that has to happen next week, when in reality, these trends take place over years, okay? So, when you look at Bitcoin, and when we try to think about, well, what is the most likely outcome if the unemployment rate goes up, my expectation is that it would likely play out somewhat similar to what it did last time, where it sort of tops out around the time of rate cuts. It might top out even earlier this time. Last time it topped out about a month before rate cuts started. This time it could top out, maybe 2 or 3 months before rate cuts start. And the reason is because in 2019, the unemployment rate wasn't even going up at the time. Now the unemployment rate's going up. So in normal business cycles where inflation's not an issue, the Fed would have already started to cut more than likely, especially with the unemployment rate going higher. But the reason that they're not, I guess, is, and I said this before, right? But my assumption, the reason I think they're not, and I think they will continue to not cut at least for the rest of this year, is because of inflation. And they don't want to deal with inflation for the next 5 to 10 years. So they'd rather just go higher for longer. So the narrative of 2024 will be, of course, how long can they hold out? My expectation, okay, and again, we got the 5.5% right, at least for the time being, for the terminal rate. My expectation is that the Fed will cut in 2024. Um, and that they'll be basically they'll be forced to essentially do so just because of the labor market starting to show weakness, and with elections coming up, you're not going to be able to justify keeping rates at 5.5% forever if the unemployment rate is starting to go north of 4 or 5%, right? I mean, there's going to have to be some type of cut in that type of scenario. I don't think that they would let the unemployment rate just go to 5% or something without providing a single rate cut. I just don't think that's going to happen. Now, it could happen, of course, if you had something like the pandemic where the unemployment rate just shoots up like immediately and there's really no time to react. But assuming it plays out like a normal business cycle, I would expect that as the unemployment rate goes higher, and let's say it gets into the mid fours or something next year, I would expect that the Fed would cut. And the issue with the Fed cutting is that oftentimes risk assets sell off into that cut, just like Bitcoin did last cycle. So going into this year, I said that Bitcoin would likely trend up for about half the year and then trend down for the rest of the half, the other half of the year. At this point, I mean, there hasn't really been much of a downtrend yet, right? And I think the key thing to recognize is that last cycle, the highs, again, came just before the cuts. And the bond market is still not necessarily forecasting, any cuts. Now, I said something that you might be wondering about, and that is, well, Bitcoin could top out several months before the first rate cut. Now, is there any history that shows that could be the case? Well, there is. I mean, if you were to look at the S&P, and I mean, here's the unemployment rate, and here's interest rates, right? But I thought I clicked on interest rates. Let's see. Okay, so here are interest rates. What you'll see over here in 2000 is that the market topped out. Right, the market topped out. If I can, in March. But then rate cuts did not occur until November, right? Again, I mean, it sort of got close to the highs, but even this high occurred in August, and the first cut did not really come until the following year, early the following year. So there are examples where the market can top out, potentially half a year or something before the first rate cut even arrives, if the unemployment rate is going higher. So for me, what I'm watching with crypto is, where does the unemployment rate go? What happens when we start to see rate cuts come in? And I mean, those are my sort of my macro views. Now, if you followed me, one of the things I've said for the last 2.5 years, maybe about 2 years now, is that in crypto, if you want exposure to the upside potential of crypto, especially this late in tightening cycles, Bitcoin often gives you the best risk-adjusted returns. So having exposure in crypto this late, limited to Bitcoin, can give you that exposure to the upside while helping minimize your downside risk. Now, of course, when you get rallies like this in the altcoin market, I get that would induce a lot of FOMO. I mean, I completely get that. I mean, a lot of these are up significantly in a very, very short period of time. So I completely get that, and I'm not trying to say that there's no money to be made, especially in shorter term trades. I'm not trying to say that. What I am trying to say is that my expectation, which has been proven valid for the last 2 years, is that Bitcoin dominance should go higher. And the reason that I keep saying that, and I know it sounds like, why does he keep talking about Bitcoin dominance? Like, it's just so annoying, right? But the reason why I keep saying that is because last cycle, dominance did not top out until we got back to looser monetary policy, right? Until we got back to rate cuts, right? It didn't top out until then. So I look at the dominance and I think like, I know it's had a pretty big pullback from 54 to 52.5%. And yes, people are dunking on me for the 10th time on Bitcoin dominance, but I still look at this and I'm like, people dunked on me when the dominance dropped from 44 to 43%. They did the same thing when it dropped from 49 to 47. Same thing from 52 to 49. Same thing from 54 to wherever it bottoms out, right? So I don't see that anything has changed. I mean, Bitcoin dominance just keeps on putting in higher highs and higher lows. And so is Bitcoin USD. But a lot of altcoins have not been putting in higher highs and higher lows this year, right? A lot of them went on to go put in new lows. So, that's sort of how I think about these markets is Bitcoin gives you the exposure to the potential upside of crypto while minimizing your downside risk in case a recession occurs. If a recession does occur, then the market, crypto tends to sell off. Now, again, it's hard to say, with certainty because we don't really have a ton of examples. I mean, we have this example here where Bitcoin essentially, it dropped 62%. But it was a pandemic, it was a black swan, right? Who's to say, how it would have behaved under say like a more normal type of recession? We had a recession scare in 2015, 2016. And in that case, Bitcoin still dropped 48%, right? Now, during this time, I mean, that was when the S&P had a pretty big drop too. But for me, I think that, and I've said this before, to me it seems like Bitcoin really moves discreetly, right? It climbs the wall of worry until the labor market shows weakness, or there's enough evidence to suggest that a recession has arrived. Now, throughout the last year, I've said that the earliest I could see a recession really arriving would be late 2023. And now we're in late 2023. And, when I think about if that statement is still valid, I can't help but think it is. Look at the unemployment rate, right? I mean, look at what the unemployment rate is doing. If next year, if we're looking at the unemployment rate and it's sitting at like 4.5%, they're likely going to backdate that a recession to late 2023 once this move got underway. If, on the other hand, in 2024, we're looking at the unemployment rate and it's back down to 3.5%, then clearly they're not going to say that we had a recession in late 2023. It all depends on how it continues to play out over the next several months, right? And I mean, there's no one that knows the answer to that question. We all think we know. A lot of people think the unemployment rate will go higher. A lot of people think that the labor market is extremely resilient and the unemployment rate will start to go back down. But it's all about probabilities, right? I mean, there are times where it sort of pops up for a little bit and then comes back down. It's not completely unheard of to see something like that happen. But looking at it like on like a 3-week moving average, right? It seems like it's starting to gain some momentum. So this discussion about, will we have a recession? And we've talked about it for not super frequently, but we've talked about it for like the last year or so, that late 2023 could be where it starts. I still think there's a chance that's what's playing out. Late 2023 could be where it starts. And it would be kind of interesting because, we sort of came into this year and it seemed like everyone thought we were about to have a recession. Now it sort of seems like everyone's saying we're not going to have a recession. And wouldn't it be kind of funny if we went from everyone thinking we're going to have a recession to then everyone not thinking it, and then we still had a recession that started in 2023, right? Like, I mean, it would be kind of interesting if we sort of made that complete round trip where everyone thought it was going to happen, then everyone thought it wasn't going to happen or thought it was going to start sometime next year, when in reality, what if it's starting right now? And I mean, you can see the unemployment rate is starting to go up, right? We talked about the SOM rule recession indicator. If you get another print at a high level, like if you get another print 3.9, 4%, then, I mean, if you get another print at 4%, then the SOM rule recession indicator will trigger because, you're at 3.9% and you're comparing it to the low of the 3-month moving average, which is at 3.5%. So, or sorry, yeah, if you take the average of 3.8, 3.9, and 4, then that gets you to an average of 3.9%. So that I think is something to consider, is like, well, these recession indicators could trigger if the unemployment rate continues to go up. Okay, so sort of summarize, right? Sort of summarize. Last cycle, Bitcoin bottomed out at the terminal rate. It topped out before the first rate cut. It bottomed out in the secondary scare. We talked about the secondary scare before, right? It bottomed out in the secondary scare at the last rate cut. My contention is that this time won't be different, and that we will get rate cuts because the unemployment rate is starting to go higher. And when we get rate cuts, that's where risk assets sell off. That is where I think the secondary scare comes in for Bitcoin, just like it always does. Everyone always thinks it won't happen, and then it happens. Where could I be wrong, right? What would lead me to being wrong about that? Some people ask me, what if there's no secondary scare? I think the way that would happen, the way that would have to happen, is if the unemployment rate doesn't keep going higher. And if the Fed truly just stays at 5.5% for the next 2 years, and inflation just sort of slowly goes away, and you get, quote unquote, a soft landing. That is the way in which this sort of view could be wrong. So, but again, my expectation is that it will likely play out how it always does. The Fed will raise, they'll hold rates too high for too long because of inflation, and it'll lead to the unemployment rate going up very quickly, like you can start to see is happening, and then that'll lead to rate cuts, and the market will start to scream for help as the unemployment rate starts to go higher, especially as we get out into 2024. So that's my base case, and I do think risk assets will likely sell off into that. Who knows? Who really? It's hard to say what Bitcoin's going to do between now and then, but that is my general expectation. So I don't really know if there's anything else sort of add, but that is sort of where I see the market going over the next few months. In the meantime, Bitcoin it's still at around 35K, which was sort of the upside target for the year that we had. Now that we're here, I don't know if I want to say that it can't go higher. It certainly could. I mean, hell, it already went to 36K practically, so you could almost say that was already invalidated. So I'm just gonna, I'll continue to focus most of my attention on how the labor market continues to unfold and what happens. Now, again, with altcoins, I know everyone wants to know about altcoins. We also had a nice rally before the recession of 2020. And again, it's a hard thing to say because everyone's just going to say, well, yeah, that was a black swan. But the problem is that if we get a recession now, or let's say in 2024, people are going to say it's because of a black swan. It will be blamed on something, right? People aren't going to just say, oh, well, the unemployment rate was slowly going up anyways. No, if we do get a recession, they'll say it's a black swan. Right, that'll be the thing that I imagine gets said, is it'll be blamed on some specific event, right? And that way they can sort of explain why it's happening. It'll be blamed on something that couldn't have possibly been controlled. But I look back at last cycle, and then we had a huge rally in the market, and we still sold off into the recession, right? I mean, Bitcoin sold off 60% into the recession. So it depends on how much weight you put into either the recession of 2020 or the recession scare back in 2015, 2016, where Bitcoin sold off 50% or so. My sort of view is that it moves discreetly. That's my view for Bitcoin. And that if we're not in a recession, then it's holding up. And if we are in a recession, then it's basically minus 50%, right? That's my view, right? I mean, I think if we go into a recession, the crypto market sells off aggressively, just like it did last cycle and just like it did the cycle before that. As long as we're not in one, it loves climbing the wall of worry. But again, last cycle, we had a very aggressive rally. Bitcoin, in fact, rallied about 60%. And then after rallying 60%, it then dropped 62%. From this low right here, Bitcoin rallied so far 40%, right? 40% rally. So we'll see. Not exactly the same setup because this was, this was really sort of like a lower high, and this is a higher high. So it's certainly not the exact same setup, and I don't mean to pretend that it is. It's not, but that is something, something to consider. And if you go look at just the altcoin market specifically, it's currently coming in at around 390 billion, and that had an even more impressive run up, right? It ran 126%, and then it crashed into the recession, a 66% drop, right? So far, total 3 from just from this low right here has rallied about 24%, right? Over here, it rallied 126% and still went on to put in a new low. So I'm just going to keep going with the with the data as it comes in, and try to follow the sort of the business cycle as it stands, and see if the unemployment rate shows weakness. If it does show weakness, then I'm guessing we'll get rate cuts next year, and I'm guessing the market will sell off. If it doesn't show weakness, then that's where you get sort of your soft landing that I know a lot of people are hoping for. I mean, given the market, I know a lot of people are hoping for that. So if you do have altcoins, congratulations on this move, right? I mean, there's nothing else to say, right? Congratulations on the move, and we'll see how things continue to unfold as the business cycle progresses. Again, if you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and we do have that sale on Into the Cryptoverse Premium at intothecryptoverse.com. We'll see you guys next time. Bye.